Hey everybody, and welcome back to Grumpy Monkey Trading. My name is Michael. On the program today, we're going to be doing another BananaRama where we take Mad Money stocks from their lightning round and we do a technical analysis, specifically charting. So stay tuned. Amberella, AMBA. Kramer says, when it comes to semiconductors, I'm an Intel and Texas Instruments kind of guy. He's now gone boxers over briefs. I'm willing to cut off my upside. Now, people don't really want to hear that. They want a little bit more juice. I am not the guy with the run and gun offense. Obviously, especially for AMBA, which really needs not run and gun train robberies. It needs just some time to relax. Obviously, coming off this huge downfall now, kind of trying to settle. We have a bit of a shoulder here. We're probably forming a shoulder there. I would expect it to sit in the $40 range before all is said and done. If you're looking for an uptrend, I would at least wait until that point. You can probably get in at a decent price. Penney, JCP. Kramer says, there are other retailers that I like more than that. I actually think Macy's is putting in a bottom, but I don't mind Penney. I like the new management. I don't really go to JCPenney. I kind of avoid it like the plague. We go once a year for our annual Christmas cards, but most of my shopping occurs on Amazon or Threadless. Looking at the chart here, though, we do see a very beautiful symmetrical triangle pattern. Those tend to resume in the direction of the original trend, which was down. However, the nice thing about this is it's late in the game with the symmetrical pattern, which means it's going to break one way or the other relatively soon in the next few months, probably. So we get to nicely watch it, and that's always exciting because it provides a buying opportunity. Whichever way it comes out, that's either a shorting opportunity or a buying opportunity. Alcoa, AA. We had this one last week as well. Kramer says now, remember they're splitting in two. The stock seems to have settled at $9. I like the action in the stock, and I'm tired of hearing that aluminum is being dumped by China because it's not anymore, and there is a deficit coming in aluminum. I hope that's true. I really do. They're not wholly dependent on aluminum, but it is a big part of their business. I really like what they're doing in the aerospace industry, as I've also mentioned a bunch of times. I also think it's settling, although the chart looks scary and concerning. This is a long-term play, but I do feel that it is something that it is going to come back, and it is a part of my retirement. So I would keep it in mind. I think it has opportunity in the future. Rite Aid, rad. Kramer says, I want to own Rite Aid. I'm not going to tell you to buy it right here because I've been telling people to buy it for a very long time, but I do think that some deal gets done. If not by Walgreens, then by somebody else. So we had this huge surge up a couple weeks ago to kind of reclaim the $8 boundary. Overall, we're in sort of an ascending wedge pattern where we have higher highs and higher lows. Those in the long term tend to break back down in the direction that from whence they came. However, it seems like that is a long way off for us. I would just be cautious because we're range bound. It doesn't seem like you would have any more upside than sort of $9.50 at this point, and you wouldn't have more than a downside of probably $6 at this stage. So cautiously optimistic if something were to pull through on a deal. Mobileye, MBLY. Kramer says, Mobileye is a very aggressive thing to own. In other words, it is a company that is doing well and the auto business is doing well. But if I have to tell you, it's so expensive that count me out in terms of trying to get an endorsement. Yeah, it is pretty expensive. It started out pretty expensive when it opened up last year as well. I would say that we don't really have a ton of data to do a lot of analysis on it. However, it is sort of resting on this support line of maintaining this over the long haul and then resting against this resistance line. You could argue that this is a cup for a cup on the handle pattern, although the handle is pulled back quite a ways. However, if it does break through and has a positive sort of earnings announcement or positive momentum, then you could certainly see a run up back to 62.5. But if Kramer thinks it's expensive, which he doesn't often say, then it might be best to stay away for now. Coca-Cola, KO. Kramer says, Coca-Cola is good, but it's up against Pepsi, which is doing a fantastic job, and its stock is really moving up. I think at this point, I would rather you be in Pepsi. I personally prefer Coke. I always have in the Pepsi and Coke challenges. But I get it. There's a bigger industry at play than just the actual core beverage. Coke overall, though, is in a nice, gentle uptrend. There's nothing really scary about it. I would really want it to kind of break through this barrier here. It's another kind of crappy cup and handle pattern, but you could argue it that this is the lip of the cup. So if it can plow through that, then it would maintain an uptrend. But good chance it's going to sink down to 40.5. So if you like it, that would be a good place to pick it up. Southwest Airlines, LUV. Kramer says, Southwest, Delta are both terrific. There's a real bifurcation going on in that business right now. Some are doing really well, some are doing badly, and I like the one that you have. I like Southwest overall. I enjoy flying them. This is obviously a nice chart where you have a positive momentum, potentially challenging the upwards part of another cup up here. However, I would not buy Southwest right now. It is getting to the point of being quite overbought. It is pressing up against this resistance line, which is not great when it's already overbought in the RSI. It's extremely overbought in your stochastics. It's extremely overbought in many different levels of oscillators. So I would say, yay, Southwest. Boo to buying right here. You might want to look for it to come down, probably kind of in the 44 region. I think that would be an acceptable point to buy again, but don't buy it right now. HIMX Technologies, Kramer says, they are way too one product oriented, and I've seen days that just take your breath away. We are going to stay away. When I first saw this one, I actually read it as Climax Technologies, and the comment of, it's going to take your breath away. I was like, oh, really? Are you sure that's not a buy? That brought me around to looking up, maybe there is a Climax Technologies, and there is, but they actually do security services, which I thought was really strange. Sort of like anticlimactic. We ensure that we take away your climax, so you're not at all satisfied. You just feel secure. Anyway, HIMX Technologies. Not a lot to say here. It's been kind of flatlining for a while. It is a symmetrical triangle pattern. That's kind of cool. Those are always fun to just watch in terms of which way it breaks out of. It is originally coming up, so that leans itself to go up again. But certainly we need to wait till it kind of bounces around in there, chooses a direction, and then that's the direction that you can kind of buy into once it kind of goes back and reinforces on that line. So HIMX, not Climax. Pfizer, PFE, Kramer says, Pfizer is precisely the wrong stock if the Fed is about to pull the trigger on high rates. $31 is the new price target, though I do not like the company longer term, he does like the company long term, but only if it buys Allergen. So $31 would be a bit of a scary mark to get down to, in all honesty, and hold it. We've obviously had a couple instances where we've gone below that recently, but if it was to hold, that would be below this support line and generally indicate a new pattern would start. So that would be concerning. For an uptrend though, they need to break above this line and hold it, at which point you could say there's a run up to there. So certainly if the rates are going to increase, which I assume they will based particularly last week on the strong jobs report, then it may be something to just sort of wait for the shoe to fall. And then it could be a good buy opportunity, particularly if it broke this trend and really fell down for a little while. So something to keep an eye on. Lumber Liquidators, LL. Kramer says, no, why mess around with that? We've got Home Depot. It's like the greatest company in the industry. And we've got Lowe's. We don't need to go down and try to roll the dice with a company like Lumber Liquidators. And I would tend to agree. Basically, you can take all of those comments, actually, and summarize them in the graphic of this chart, which is that you started really high in the top of 2014 at $150. And in that time, you've gone from $115 down to basically $15. You've shaved $100 off the share price, which indicates just huge fundamental problems with this company, particularly gaps down that hold, huge gaps down or bearish engulfing candles that engulf like half a year. That's just scary. People often say like buy low and sell high. So you might look at this and say like this is an amazing buying opportunity because it once was so high, it must get back there eventually. But this is just like warning sign, red flags all over the place. This is like an awful dating situation that you would just want to avoid. Best Buy, BBY. Kramer says, I'm going to tell you that I prefer GameStop to Best Buy. I think that's a much better situation. Yeah, Best Buy, otherwise known as Amazon's showroom. I kind of like going in their stores. It's fun to browse around. I don't really understand GameStop, but I also don't do a lot of gaming, so maybe that's why. For Best Buy, we kind of have an ascending triangle, though. You could almost call that flat, in which case there would be an opportunity for it to break above, which is what tends to happen with ascending triangles. At the moment, though, it's kind of bouncing between these two trend lines, and so I would wait for it out. They are doing interesting things to try and combat the fact that there is so much of an online presence that's combating them. But I think as the only really major player in that market, from a big box perspective, they do have a bit of a niche market. And every time I go in there on Black Friday, I spend 2 hours in line. So that's got to count for something. Nordic American Tanker Shipping Limited, NAT. This was a Kramer stock. This was also a stock that was requested of me through Google messaging. So feel free to type in the comments stocks you're curious about, tweet me. All those things are totally acceptable. And I will take a look, or I will add it to a show. So Kramer says, I know it's been weak. I don't care. I think that the oil trade is coming back, and I want you to own this stock. I look at it, I had to go really far back, so this is 2007, to really start to see some of the resistance and support lines that are available for this chart. We really ran up quite quickly here and pinged off this resistance line. Now we're sort of hovering down here. I would say that the low side, the downside, is probably around 13 for the moment, and the upside is capped until we break this resistance line. But when we do, then basically it opens up a whole new world of possibilities to really challenge some of those highs from back in 2007, 2008. So if oil is coming back, which I think it is, but I think it's still going to be slow, then we do have the opportunity to challenge those. But I would be looking for it more around the 13 region. I think there'll be a bit of a slip back, particularly with the interest rate hike. So it'd be an opportunity then. But that's just me. All right, everyone, that's our show for today. I hope you enjoyed watching. If you did enjoy the show and the series as a whole, please subscribe. It's really important to bring up that subscription level so I can do other cool things. Also, like I said, comment, tweet, like the video. All those things are really awesome. Try and share it and distribute it. That makes me super happy and want to work so much harder for you. Have a great week, and I'll see you again soon.